Inflation is running rampant. What are we going to do? What's the Fed going to do? This is all becoming very chaotic, but let's see how we manage it. Palmer's in here pumping his Viacom meme stocks. I'm just kidding. It's not a meme stock. All right, guys. How is everyone? Let's get at this thing. So the CPI number came out at 8:30. It's not surprising what it was. Inflation is continuing to climb. And you know what's great about this number is that it excludes energy and food. So I know that food prices are going up. I think you know that. Just go to the grocery store. Energy prices are crazy. I mean, right now in Ohio for premium gas, it's about $3.70 a gallon, something like that. So gas prices are for sure going up. I don't know if electric and all that stuff. I haven't really looked at my electric bill. It just comes out of my account. Maybe somebody can give me some insight there. But let's get at it. So CPI number, where is that? The index increases 5.4% in June in relation to the analysts' expectations of 5%. Oh my God, analysts got something wrong? Since when? Here we go. June consumer pricing increased sharply. It is the highest 12-month rate since 2008. And I actually just pulled up this Instagram post. It's from Peter Schiff, great economist. He wrote a book called Crash Point, and he wrote this prior to the 2008 collapse, the housing collapse. He's very good. If you want to get that book, it's called Crash Point. It's pretty interesting. And then he wrote a second one called Crash Point 2.0. I'm sure he has 3.0 now, but he has a very good podcast. He's a very good economist. But where was that? I sent it to my parents, and of course they're arguing with. Well, my mom's not arguing. My dad's arguing. Let's see here. The .com. So he goes through the .com, he goes through the housing bubble, and then he comes to what he calls the pandemic bubble. So you see a lot of the same correlations that were happening in all these different bubbles. So pay attention to those things and learn about history. So the index measures, the CPI measures what consumers pay for goods and services, including clothes, groceries, restaurant meals, recreational activities, and vehicles. Prices for used cars and trucks leapt 10.5% from the previous month, driving 1/3 of the rise in the overall index. Those prices for cars, used cars, just keeps going up, up, up. It's really crazy. Let's see here. What's next? Supply shortages and higher shipping costs continue to drive rapid increases in goods. The U.S. GDP rose 6.4% at seasonally adjusted annual rate for the first quarter. So I'm not going to go through the rest of this article. It's pretty much the same old what we see every single morning. But just know that these numbers are continuing to climb. Now, this kind of gives us an indication of how the Fed is going to go at tapering the mortgage-backed securities and the treasuries that they're purchasing, the quantitative easing that they're doing, that they're not calling quantitative easing, even though it is quantitative easing. Somebody in the chat said, I think it was Jonathan, he said, wouldn't increased inflation mean that they're going to start increasing the interest rates? Yeah, you would think so. But when I look at everything that they're doing, I keep thinking, are they actually going to do this? I personally think that they're going to leave rates as low as possible for as long a time as possible. Guys, we saw, 2 weeks ago? We saw when they were talking about increasing the rates 25 to 50 basis points, the whole world just like collapsed and we were seeing massive declines in the stock market. So that was their indication to say, we cannot increase, we have to do anything we can to not increase these rates at this time. I do believe that they're going to go out and they're going to try to come up with some other method. I don't know how. I have no clue how you do that. This has never happened in history. So we're going to see how it goes. Guys, if you look up, if you have Instagram, search Peter Schiff and you'll see the post that he made. PeterSchiff. And my mom just posted in the thing that the book title is Crash Proof 2.0. Crash Proof. I thought it was Crash Point. All right, next. Where do I want to go next? Earnings. So earnings season is underway. Let's take a look at the earnings before we where was my earnings thing? Here we go. Here, let's pull up the internet just so we can see what earnings are coming out. Guys, you got to check this calendar every single day. Actually, I would check it every night before so you know what's coming next. So this morning, we had JPMorgan report. They reported very well. Goldman Sachs did well. Pepsi, Fastenal, ConAgra. So earnings season is underway tomorrow. Bank of America, Delta, Wells Fargo, Citigroup, BlackRock, PNC. Thursday, what other banks? Morgan Stanley, U.S. Bank, the Bank of New York Mellon, let's see, Truist Financial, and on Friday we have Charles Schwab reporting. So be aware of these banks, and this is earnings season, so we're gonna see what's happening. Where's that earnings article? All right. The biggest takeaway that I wanted from this article is huge earnings don't equal huge returns. And I always say that earnings are a total crapshoot. That's why when I tell the people that are in the Bid and Ask Nation, do not be in earnings, do not be trading stocks that are reporting earnings. That's why I want you to check your earnings beforehand and move on, because we have seen there's tons of companies out there that report slam dunk earnings. One analyst will say something about the forward-looking guidance, and boom, the thing is just crashing like no one's business because analysts are brilliant. So be careful when you're trading earnings. Know when your earnings are. So here we go. Historically, 60% of down quarters since 1996 occurred in quarters with earnings beats. In 2000, despite earnings beating consensus for 10 straight quarters, the S&P declined for 4 consecutive quarters. So this does happen. Earnings season needs to be awesome. That's what an analyst from Wall Street thinks. He thinks earnings were up 64% over last year, according to FactSet. But these gains have already been factored into these prices. I don't agree with that. I've told you guys what I think about things being baked into stock prices. I don't believe it. I think that, yes, maybe something is, but as soon as there's some kind of news that actually comes out, I do not think it's baked in. I think you're going to get that initial reaction because Everything is based on emotion in these markets. And frankly, there's a lot of quant funds out there. And as soon as price points start hitting moving averages, resistance points, whatever, the computers sell tons of shares. So I do not believe that gains or losses or whatever have been factored in any stocks, and no one's going to convince me otherwise. What investors need to see to keep pushing stocks higher then is something new to believe in. Okay, well, I personally don't. There's a lot of cash on the sidelines. I think there's over $5 trillion of cash on the sidelines. As long as that cash stays on the sidelines, you're not going to see. I mean, if the Fed stops buying treasuries, mortgage-backed securities, I think the party's over. You have a lot of money sitting on the sidelines in the hedge funds because they know that this market is incredibly overvalued. And they know that there's 5 stocks that have pushed this market up to where it's at. And those 5 stocks are going to decline extremely hard. Even though everybody says that Google can't go to $1,000. Yes, it can. Yes, it probably will, because all you have to do is go back and look at your chart and go look at March of 2020. Oh, well, Mo, that was COVID. Okay, noted. You need to understand that stocks fluctuate. They do not only go up, contrary to popular belief. Actually, it's contrary to hype dork belief. It's not contrary to popular belief. It's just absurd to think that. JPMorgan, earnings soar amid exceptionally strong consumer balance sheets and credit release. So their earnings per share came out this morning, $3.78 compared to $3.15. Their revenue, they exceeded revenue expectations, $31.4 billion. During the quarter, the largest bank in the United States earned $11.9 billion in net profits. Stocks only go up, but stocks only, yeah. Great point, Garrison, my bad. All right, he noted that this is Jamie Dimon, of course. He noted that the consumer balance sheet remains exceptionally strong while the economic outlook continues to improve. The CEO pointed out that the net charge-offs were down 53%, which was better than expected, reflecting the increasingly healthy condition of our customers and clients. Dimon also added that debit and credit spending was up 45% from a year ago and up 22% from the second quarter of 2019 pre-pandemic levels. So we look at this number of credit card spending, well, debit and credit, was up 45% from a year ago. Then we bring in that story yesterday that we did, and we're saying that people are paying down less debt than any time in the past 20 years, I think it was. So that's probably a good combination. Not. Shares of JPMorgan were trading down 1.5% this morning after you just saw that they crushed their earnings. So that's what happens. That's what happens. All right, let's see what the Fed taper. Let me blow this up a little bit. Fed officials start their taper talk. That doesn't mean the end of easy money. I don't believe it ends. They're not going to stop easy money. Jerome Powell, at this point, Trump pushed him to do a lot of rate cutting and spending and this and that. At this point, Jerome Powell is not going to be the one that's going to take responsibility for collapsing the economy. If he's gone this far, he's all in. He ain't stopping, and he said it multiple times. The Fed is going to do whatever we have in our tools to make this thing keep going up, 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 up. All right. It's official. The Federal Reserve officials are talking about tapering monthly asset purchases sooner than they and markets anticipated. Now, they may have began talking about it, but I don't think they're going to start truly doing anything until after they meet in Jackson Hole in August. I truly think that what they want to see, what the Fed needs to see, is they have to see that they want to see what the jobs numbers are in August, September, after half the country has gotten rid of their additional COVID relief. I think they want to see where jobs are going. And we've seen, I said yesterday, I have a friend who runs a company, and he said that he's starting to see an uptick in applications. We went to a restaurant yesterday. They had the most limited menu I've ever seen. And this is a restaurant that we probably go to once a week. and they said we don't have staffing. There's nobody that can work in the kitchen. So everybody is looking for staffing. I told you about the sign that I saw last week. It said, "Of course we are hiring. Who isn't?" So when all of that stops, when people are kind of quote unquote forced back into work, then I think the Fed is waiting for that too. They're dumb, but they're not dumb. All right. This guy, okay, here we go. He notes, who's he? The BMO Capital's person. Okay. He notes that the debate on both timing of any adjustment to the $120 billion in monthly treasuries and mortgage-backed security buys, as well as the breakdown between buying in light of valuation pressures on the housing market. So, all right, we think, okay, I should probably just read the rest of the article. While several members have discussed the tapering of the purchases of mortgage-backed securities, $40 billion a month, sooner than the purchases of treasuries, $80 billion a month, plenty are skeptical. I think that they're going to start bringing them, I think they're going to start putting them together, and I think they're going to cut them equally when they start to do the trim. We think that this probably won't happen because home inflation is set to slow sharply over the second half of the year. Why? Thanks to falling home sales and adverse base effects. I do not see home sales falling one bit. I know somebody who bought a house yesterday and he paid $15,000 over ask. So I don't see home sales falling at all. We still think tapering will start in December, and it will be split proportionally between treasuries and mortgage-backed securities. Okay, I agree with them on that. While various sounds like it represents more voices than some, economists say that the Fed is likely to remain patient over the coming months and as they try to ascertain whether labor markets and other shortages pushing higher rates are transitory or more persistent. Here we go again. They just love it. They just love it. Why is Bitcoin price down? Meet Kevin is very confused. Well, Meet Kevin is a very confused person. That's why he is the perfect candidate to run for governor of California. All right. Where is our small business stuff? This from Reuters. U.S. small business optimism rises despite labor shortages and inflation worries. Confidence among small businesses in the United States has improved slightly in June after declining in May, despite owners worrying about a labor shortage and inflation. National Federation of Independent Businesses, optimism index rose 2.9% to a reading of 102.5. 7 of the 10 index components have improved and 3 have declined. Small business optimism is rising as the economy opens up. Yet a record number of employers continues to report that there are few or no qualified applicants for the positions. That's definitely what I'm hearing. I am hearing that people are starting to apply. They're just not qualified for the roles that they're applying for. So I guess that's another problem that we think about. The people that are going back to work, are they qualified for the jobs that are open? I mean, this is all because this is just this. You just keep layering all of these things and throwing them into the cake batter. Eventually, something has to stop. But does it? The Fed can just keep doing what they're doing. I mean, we're already like $40 trillion in debt as a country. They can tell me $30 trillion all day. Not buying it. They printed $12.2 trillion for the pandemic, and they just took it right off their balance sheets and said, yeah, that money will be paid back. By who? It's nonsense. You know what I should do this week? I'm going to write this down. I drew out this little schematic thing. Let me type this circle chart. I want to show you guys how the Fed and the government kind of run this circle of basically putting money on credit cards, paying down very little interest rates and whatnot, and how they get away with what they're doing and not claiming that all of that money was more debt put towards the country. Where was I? Just kind of went off on a tangent there. Earlier this month, the trade group said that its monthly jobs report that 46% of small business owners reported unfilled jobs in June. 56% of respondents said that they had few or no qualified applicants for their positions in June. Hiring appears to have strengthened in the United States as companies have hired workers, the most workers in 10 months. Okay, so that's good. I'm not saying that's not good, but put it in perspective. Put it in perspective of how many jobs were out there, how many job openings were out there, etc. So we just need to make sure that when you read these stories, put these things in perspective. That doesn't mean that this is the greatest thing ever. Go and do a little bit more digging and find all of this disaster that we're seeing in the above in this article. Business in the NFIB survey also flagged inflation as a worry, and a record 44% of businesses plan to increase their prices over the next 3 months. So that ain't good. Lastly, Boeing shares slide 2% pre-market. Man, Boeing has been they've just been getting beat up in the news nonstop between all of their planes. And now it's the Dreamliner. So Boeing shares slid 2% pre-market Tuesday after the aerospace giant said that it identified additional rework that is required on its unveiled 787s, those are the Dreamliner jets, delaying their delivery through the rest of 2021. Boeing has delivered 79 aircrafts in the second quarter and 156 aircrafts to date. So it's great that they're delivering planes and such, but man, it's just always bad news for Boeing. While we're at it, let's look at Boeing's chart, because I had this on my watch list probably 3 weeks ago, and then I took it off because of what it was doing. So yeah, it was on my watch list back in here, but we've had this incredible fall, and now it's just kind of hovering pretty well above its 200-day moving average. But man, Boeing is a rough go. I remember, man, I bought these guys back at $100, but I think I don't know if I still own them. I just need, if we can just get some kind of reversal and get this thing moving. Good thing is people are going back on planes and whatnot. So, all right, guys, let's look at. I want to look at the Treasury Department's website for the Treasury yields. So that one is ticked down. The 10-year is okay. So pretty much everything's stabling out, but stabilizing a little bit closer than it was before. So let's just make sure that we have, we're paying attention to the flattening of the curve, and we're paying attention to maybe the inversion of the curve. That is going to be a big thing to watch out for. Earnings, we already went over. All right, if you guys want to join our Patreon and our software, it's pretty awesome. We have a big announcement coming at 1 o'clock today. That is, it's going to be me and Paul on the show, because Seth is still in South Carolina, Myrtle Beach. So, all right, $7 gets you into our Discord. There's like 3,500 people in there or something, 3,700 people. It's a lot. If you want Discord plus software, all of the software and it just keeps getting better every single month, every single day. I've been doing a lot of bug reporting and improvements to the software. It's pretty awesome. So $25 a month will get you that. If you want to join the Bid and Ask Nation, that's my tier. We're going to do some trading in a few minutes. $69 a month. And guys, these prices are just going to keep going up. This will eventually be $50. This will eventually be $100. And oh yeah, we have a special guest host on the show today. I wasn't sure if I was supposed to say that or not, so I didn't. If you want to do a one-on-one Zoom call with me, and it's $500, one time, 1 hour, and I've done it with multiple people, and they have been, I did it with them for day trading, and man, they've just crushed it since from that 1 hour session. So it's bring whatever you want to talk about. If you have no idea what I'm talking about with what a candlestick is, bring it and you'll learn. If you want to go through some nitty gritty details, bring that and you'll get better. So, and if you want to do a real estate deal with Paul, $10,000 for his consultation on any kind of real estate, and especially in this market, you might want to do that. Jonathan B, he's talking about Merle's Inlet. That place is pretty cool. Seth, you should definitely go there if you haven't gone there. It's not very far. All right. Now what? Send me some stocks and we'll go over some stuff. Before I continue, I want to enforce that before people always DM me or they'll send me a message on Instagram. By the way, my Instagram's TraderMo_EM. TraderMo_EM. People message me on there too. They always say, I have like $500. I have $1,000. I'm 20 years old. I'm 19 years old, whatever. And they say, is it worth it for me to join the Bidnest Nation? It's $69 a month, this and that. Guys, I'm teaching you a process that you can use for the rest of your life. Yes, you maybe have $500 and you're 19 years old, but eventually you're not going to have $500. You're going to probably have $500,000. How do you manage it at that point? Do you really want to be learning how to manage your money when you're, no offense to anybody out there, wouldn't you rather learn how to manage your money when you're 19 years old or 20 years old than when you're 45 years old and you have no idea what you're doing? I mean, to me, it's a process that you learn, and even if you're not trading real money, you're gonna compensate that eventually. It's what you want to invest in. Not only do you get access to me, you get all of the software for free. So this whole thing that we're doing with Everything Money, it's a learning process. It's learning processes to put in place for the rest of your life. It's not just about going in and YOLOing your life into Neo or whatever the hell else these morons are talking about and trying to become a millionaire by the time you're 20 years old. No, it doesn't work that way. That's not reality. You see it on everywhere right now. Maybe it is reality, but just trust me. Just trust me. If you join, you adapt the mindset, you learn how to trade, you learn how to invest long-term in value, you're going to do very well for yourself. So I just want to emphasize that this is a learning process, and even if you have no money, I think it's worth it because you'll learn it, and as soon as you get money, you'll jump right into it, and you will be, you'll kill it. All right, next, let's see. I want to do Uber for someone that asked earlier. With Uber, I went into Uber the other day. That was weird. You move. I mean, this red line has to turn up. That's what needs to happen. And frankly, I think you need to go above this area of, what is that, $52 a share or something? Yeah, you need to go above the 100-day moving average. Call it that. So you got a long way to go with Uber before you can do anything with it. All right, let's see here. Let's see, DGX. So I actually liked DGX yesterday. The problem was it basically had no volume when I liked it. And so it was up here when I liked it. And that was great. But you see the stock price just pulled right back. And it's because there was no volume on it at the time. At the time, this guy was all the way down here. So I like where it's coming through the sweet spot. But what I need to see is an engulfing candlestick like that. And I need to close the day with this thing filled up. I can't have a wick like it did yesterday. So keep watching DGX, and eventually I think it'll be a stock that you can go ahead and purchase. And I might do the same. All right, let's see. PayPal. What do we got with PayPal? PayPal was a good one a couple of months. Oh, look at this thing making its all-time highs again. All right, so just looking at this chart, look at these wicks on that it has. This to me tells me it's a great stock to day trade just by seeing all these wicks all over the place. But right now you're trying to get through all-time highs. You need a lot of volume. The volume's actually pretty decent. So maybe you have a chance at doing it, but I would not add to this thing until you break out over whatever this level is, make an all-time high, and then you can confidently go at it. All right. Oh my goodness, Alibaba. Didn't I do Baba yesterday? Downtrend. It's snapping back on you. Nothing fun there. PBA. Somebody asked me for this earlier. Is this the Pro Bull Riding Association? Oh no. Okay, so it's dropping on its stochastic. You can short this if you want to, but I personally would not. If you want to short it down to the 100-day moving average, you can, but not my thing. Not my thing. What's good value on a trade? Good question. I personally like to see average volume over 1 million shares traded per day. That's my personal preference. You can do less. You can do 500,000 shares traded per day if you want to. But I personally like 1 million, and I don't like going under 500,000. That just becomes too crazy. Somebody can easily go in there. And typically, those kind of stocks are pretty cheap, where you can have a couple dollars or maybe even a couple cents. And anybody can easily go in there and buy. I mean, if you have a stock that's $1, somebody can go and buy 500,000 shares. There's your average volume for the day. They're sending that price through the roof. Let's see. Ford. What's Ford doing lately? Oh, they've kind of come back to reality. I guess they were disruptive up here, but they're not disruptive anymore. Sad. All right. So with Ford, they're technically a short right now, but they're just stuck between two moving averages, and they have been for about 10 days. So let's just leave that one alone. Don't do anything with it. Roku. I used to like Roku. That was a fun one. All right, so Roku, let's zoom in here and see what's going on. So our stochastic has rolled over on us, but it's not a downtrend yet. And I know that because on my candlesticks, these are not red. This is why I like having these to teach you guys. That's why I pay for these charts to teach you. So this red line is, as soon as that red line drops into the sweet spot on the downside, that's when you can go ahead and short it. But frankly, I don't know if Roku is something I would short. Roku is one of those high flyers. It's approaching all-time highs, but you can see that it's at a resistance point right here that it's been facing since December. So let's see. All right, I'll do this Virgin Galactic. Everybody's obsessed because this guy went to outer space or something. I thought this was disruptive. Shouldn't this be all the way up here at $88 a share? All right, it's a short for sure. I wouldn't get into it yet, but if you want to short it, just wait. You're going to have a lot of issues down here around $32 getting through, so be careful with that one. All right, I'll do one more, and then I'm getting out of here because my voice hurts, and we have a long day of recording. Okay, I'm going to start scrolling just because I want to see what you guys have said. Pins, I'll do Pinterest. This better be a short. They said it. Okay, so it's for sure on the watch list for a short, and the reason is you've rolled over, but you're not in the sweet spot yet. You got to get into the sweet spot, and honestly, it's going to be very hard for you to short above the 100-day moving average. So that's going to be a tough one. Just keep being patient with it. But all right, that's it for today. I will see you guys tomorrow morning. But before that, I'll actually see you guys 1 o'clock today. Guest host on the show. Big announcement coming at 1 also. Make sure you tune in. Join the Bid and Ask Nation. If you want the training session with me for $500, I think it's completely worth it. And frankly, depending on how much money you're making, you might make $500 back if we do a day trade during the session. So you guys have a great day. See ya.